I'm curious, John, why is it that the use of OCBOA financial statements has become so popular?
Jeff, OCBOA stands for Other Comprehensive Basis of Accounting, and the issue was created some years ago because more and more companies were preparing what was called at that time non-GAAP statements. So all we had was guidance for GAAP, but some folks didn't want to do GAAP, didn't have to do GAAP. And so they would prepare a set of financial information that met their needs, but that financial information wasn't based on any standard setting process. As peer review became more of an issue in the mid-90s, they were seeing more and more non-GAAP statements and felt it was important that some guidance be issued surrounding non-GAAP presentations. The AICPA took that under advisement, encouraged the Auditing Standards Board to get some guidance out, and they eventually did. Audit Standard SAS 62 has a section on what's called Other Comprehensive Basis of Accounting. So they replaced the phrase non-GAAP with the phrase OCBOA. Now that phrase OCBOA doesn't mean any one type of presentation, meaning it could be a tax basis presentation, it could be a cash basis presentation, it could be a regulatory basis presentation, or even something else that might have some standards that one could look to and point to. So for example, tax basis, you look to the IRS code. And tax basis presentations, which I believe are probably frequently prepared around the country, can only be tax basis if they tie to the filed tax return. So the taxable income number on a tax return would theoretically have to be the income number on the tax basis statement of revenue and expenses. There are many tax basis presentations. There are many OCBOA basis presentations. And when you look at why, the issue of why has to do frequently with GAAP complexity. The generally accepted accounting principles have gone through a complex phase since after Sarbanes-Oxley, after around 2004. And there has been a much more concerted effort to issue standards that are more appropriate for public companies. So what that does is it leaves private companies sometimes trying to comply with standards that are more appropriate in the public arena. Those standards are complex because the public companies that they're accounting for are also complex. But then when we try to apply that to a less complex entity, the cost of complying with many of FASB's recent standards, and I'm talking about variable interest entities, uncertain tax positions, fair value, the cost of complying is very expensive for a smaller and/or private organization. So they tend to look for alternatives that might be acceptable, and usually the acceptable is to a third party. And more companies have determined over the last 4, 5, 6 years that OCBOA and/or income tax basis might be an acceptable alternative, and they've been encouraging third-party users, banks, bonding companies, etc., to agree to allow them to use these types of bases. I'll say, Jeff, that the most dominant basis of accounting I see in my travels is income tax basis accrual. So what the third party gets is an accrual-based presentation based on the tax return. If the entity we're talking about is concerned with cash flows primarily, as opposed to accrual-based income, income tax basis is a viable alternative, even though some still might object to it. There's many more companies today doing tax basis / OCBOA presentations.